Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that's all about bonds and interest rates today. First up, selling of US government bonds accelerated today, sending yields higher again, just a day after the US Fed had briefly calmed the market. The Fed's own raised internal growth forecasts for the US economy are probably behind the push higher. And US jobless claims rose last week in an unexpected turn. But to be fair, the actual rise was a small 23,000. But the seasonally adjusted number was twice that, and that's the one that's been heavily reported. Overall, less than 4.5 million people are now on these benefits, a big drop in a week. Now that these new additional stimulus payments are going out to people directly, this fall isn't quite the social crisis it was last year. Much more positive is the latest regional Fed factory survey, this one from the Philly Fed, a heartland industrial region. They reported a sharp increase in both growth and optimism. They also report a sharp rise in the prices factories are paying for inputs. In China, they're facing a wall of bond maturities over the next 8 weeks. $300 billion matures this month and another $200 billion in April. This pressure has been seeing most new issues being cancelled as the financial markets try to absorb this very short-term pressure. It will probably be handled with Beijing's support and adjustment, but it does point out that there are still strange unbalanced forces at play in the debt-heavy Chinese economy. Overnight, there were central bank policy reviews in a number of countries. Taiwan, Indonesia, Egypt and the UK all kept rates unchanged. Brazil raised theirs 75 basis points. Japan will announce their review later today, but it is unlikely they will change any settings. In Australia, they've announced that their jobless rate has dipped from 6.4% in January to 5.8% in February, an improvement far better than expected. A year ago, however, it was 5.1%. And staying in Australia, you may have noticed they've had their quietest bushfire season in more than 10 years. Normally, the headlines are about smoke plumes that stretch all the way to New Zealand at this time of the year. This year is different, however, with storms and wet weather replenishing their waterways and water supplies. US Treasury 10-year yield is up 8 basis points from yesterday, now at 1.73%, and that makes it the highest in 15 months. And the price of gold starts today up $5 at $1,733 an ounce. But oil prices have dropped hard today, down $3 a barrel, and now just under $61 a barrel in the US, while the international price is now just under $64 a barrel. And the Kiwi dollar opens today at 71.9 US cents, slipping back to where it was before yesterday's US Fed announcements. Against the Australian dollar, we're down half a cent to 92.3 Australian cents, and against the euro, we're unchanged at 60.3 euro cents. That means our trade-weighted index opens today at 73.9, and very little different to where it was a week ago. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.